Hello everyone, welcome to our weekly review of the main business news. Tesla's CEO Elon Musk purchased 9.2% stake in Twitter. The move, which sent Twitter's stock up 27% on Monday, turned Mr. Musk into its largest shareholder and granted him a seat in the board. Mr. Musk is reported to own 73.5 million shares, worth around $2.9 billion. He has long been active on Twitter. He usually shares information about his businesses, which contributed to a conflictual relationship with the U.S. Securities and Exchange Commission. Recently, Mr. Musk took aim at Twitter's algorithm software in terms of disinformation, censorship, and content moderation. Critics say the algorithm affects how people form opinions and make decisions in the real world. World's total debt and inflation keep growing. The surge in food and fuel prices raised pressure on governments around the world, stretching precarious public finances and intensifying political instability. As protests broke out indiscriminately around the world, governments have adopted subsidies and tax breaks to shield households and businesses from the soaring prices. This situation is leading to higher government debts, just as borrowing costs are rising. All this extra expenditure in subsidies and tax breaks tops 3 years of surging pandemic-related public spending. For some countries, there is the risk of political unrest. Emerging economies must refinance debt worth about $7 trillion this year, up from $5.5 trillion in 2021. Amazon is planning to spend billions of dollars on broadband satellites. The U.S. Federal Communications Commission authorized Amazon to deploy more than 3,000 broadband satellites to provide internet services. The launches will be provided by Blue Origin, a company funded by Jeff Bezos, United Launch Alliance, owned by Lockheed Martin and Boeing, and the French company Arianespace. With this move, Amazon is trying to compete with Elon Musk's SpaceX. Mr. Musk's company is the undisputed leader, with more than 1,900 satellites already deployed and 250,000 subscribers. Global minimum tax stalled, both in US and Europe. The 15% global minimum tax on the profits of large corporations, which was agreed upon 137 countries in 2021, has seen this week another roadblock. Poland's veto came during the second meeting of European finance ministers held to discuss the issue. Poland claimed that the EU should first agree on the reassignment of taxing power. Tax decisions in the European Union require unanimity. Officials at the European Commission said they will try to persuade Poland to back the proposed path. This stop came after the new minimum tax stalled in the US Congress due to unrelated disputes over the fiscal legislation. Democrats, though, are hoping to advance the package in the coming months. This might be the most significant global tax agreement in more than 100 years. French prosecutors are investigating Macron's government spending. The tax fraud and money laundering investigation follows a Senate report on consulting services contracts, including McKinsey. The report alleged that McKinsey hasn't paid corporate tax in France for at least a decade. The French unit of McKinsey said that it complies with all applicable French tax and social security regulations. Mr. Macron said that there is nothing improper about the consulting contracts. He claims that since the start of his presidential term, he had fought to make sure companies operating in France pay taxes. His finance ministry opened an investigation into McKinsey in December, before the report was published. China's services sector posts steepest decline in 2 years. Activity has dropped as authorities have locked down major cities in an effort to contain the largest COVID-19 outbreak. China's Services Purchasing Managers Index dropped to 42 in March, from 50.2 in February. A reading below 50 indicates activity is contracting rather than expanding. Service sector employment fell, new orders and export also declined, business confidence reached a 19-month low. China's economy is also struggling with a real estate crisis and a slowdown in demand for Chinese goods overseas, as inflation hits Western consumers. The World Bank has cut its forecast for China's economic growth this year to 5% from 5.4%, but it could go even lower. While Beijing has set a growth target of around 5.5%. US and the European Union set new sanctions on Russia. After allegations of potential war crimes, US and EU decided for tougher measures against Russia: ban on imports of coal, stop to the export of high-tech machineries, block to financial institutions and state-owned enterprises, asset freezing for government officials and their families. US also plans to ban new investments in Russia. Let's listen to the statement from the EU Commission President.
It is important to sustain utmost pressure on Putin and the Russian government at this crucial point. So today we are proposing to take our sanctions a step further. We will impose an import ban on coal from Russia, a full transaction ban on 4 key Russian banks, among them VTB, the second largest Russian bank, a ban on Russian vessels and Russian-operated vessels from accessing EU ports. Additionally, we will propose a ban on Russian and Belarusian road transport operators. Further targeted export bans worth 10 billion euros in areas in which Russia is vulnerable. This includes, for example, quantum computers and advanced semiconductors, but also sensitive machinery and transportation equipment. With this, we will continue to degrade Russia's technological base and industrial capacity.
Samsung forecasts first quarter record revenues. The company's outlook topped market expectations thanks to a prolonged chip shortage. The world's largest maker of memory chips and smartphones forecasts operating profit of $11.6 billion in the first quarter of the year and revenues of $62.7 billion, up about 18% from the prior year. The company generates most of its operating profit from semiconductors and has a dominant position in memory chips. It also expects a boost from the latest Galaxy smartphones, which made its debut in February. The company is the largest smartphone vendor in Russia, with a 30% market share. Last month, it suspended shipments of all of its products to the country because of geopolitical developments, and it is now constantly monitoring the situation.